Good morning, everybody, and welcome to the 110th CICMQ Zoom call session since March last year. I'm really pleased. We've got an extended session today, which is going to last approximately about 2 hours or thereabouts. We are recording it, as you can tell, and this is going to be posted on the CICM's YouTube channel later on. On the call today, who are going to be presenting, we have Diane Bamford, who is representing in the red corner, I guess. In the red corner, we have Diane Bamford. Diane Bamford is an AP professional of many years standing. She's currently the AP manager for a company called Great Places, which is a housing association, I believe, Diane.
Yeah.
And she's been in the industry for some considerable time. And Diane will be doing a presentation on accounts payable best practices, the key points in the AR function, what are the key issues that she has, etc. And then following that, we have got Karen Holdstock from ARCO. If you can maybe say hi, Karen. And she's on mute. Or she's got a microphone off.
Sorry, morning.
There you go, morning. Yeah, it's always great to have the microphone.
Yeah.
So yeah, Karen, CICMQ accredited, as you know. She also presented with her colleagues from ARCO a couple of weeks back, and that's also on the YouTube channel, and talking about how they coped through the pandemic and the significant improvements that they put in place on their debtors ledger, which was really good. So she's going to be talking about the key issues now. I haven't seen her presentation yet because she only sent it through about midnight. So I haven't seen it yet, but I'm sure it's fantastic. So I'm trusting you totally there, Karen.
Okay.
And then we're going to have a quick polling session. And a polling session really is to understand who have we got on the call, which are AP, which are AR, which are a bit of both, and a couple of other questions as well. And then we're going to move over to Chris. So Chris Wu is the owner and manager of Westgate Moore, who are recruitment and a number of other things in the AP community, aren't you, including software and consulting and audit consulting, etc. And I've known Chris for, what, a couple of years now, isn't it, Chris? Something like that?
Start lockdown.
Yeah, and we worked together a bit on the APQ stuff that we've done with Jamie. And also I've actually done a presentation to his team on accounts receivable, which you know, they wanted a real expert on that, and unfortunately I was the only one available. So so he's on today as well. He's going to be giving a demo of a system which it solves a problem for both AP and AR. Which is account reconciliation, which is something that we all love. So we're going to be doing a demo, and he's going to outline some of the issues as well around that too. And also, I'm really pleased to have on the call Jamie Radford. Jamie Radford is the chief executive. There he is. You can tell he's from the AP Association because he's got the banner behind him. So thanks very much for and the mug as well. So thanks very much for joining, Jamie. Great to have you on again. Jamie also presented last year on one of our sessions back in the early days of the pandemic. So for the first off, we're going to talk and we're going to run through the slides that Diane has sent us through. Okay, so this is the AP community and the AP issues and stuff like that. What is best practice in the AP community? I'm just going to share my screen and then we will crack on. And Diane, it's very much over to you.
Good morning, everybody. So as Chris has already said, I'm Diane Bamford. I'm currently finance manager at Great Places, so I actually look after AP and AR at Great Places, but I have been involved with accounts payable since 1989, so as you can tell, quite a lot of experience. So this isn't a prescribed list I've picked up from somewhere else, although there will be familiar things on here. This is my view of what I think are the best practices for AP, or the top 5 best practices for AP. And the first one, if you can just go through the, so obviously we've got top 5 AP best practices. What are the key issues of AR and how AR and AP, I should say, and how AP community can help. And then a quick question and answer session, if you've got any, that is. So next slide, Chris. So this might come as a surprise to some people, but my first top best practice is having good supplier master data. So for me, you set up a supplier once for feeding into your AP system. So you may have a separate vendor master data to feed into your ERP, or it might be part of your ERP, but you only set up a supplier once. The number of times I've experienced issues because a supplier's on multiple times, they're numerous to say. So set up a once. If you've got multiple accounts with that supplier, then you can set up what in a previous organisation I worked for, we call them sites. So you have the supplier set up, and then underneath that supplier, you have several sites set up for all those different accounts. So you can deal with those accounts for a supplier. You should be able to have the ability to set up. So if you've got a supplier and you've got corporate contracts with that supplier, you should be able to select that corporate contract against that supplier. And if you've got multiple entities within your organisation, you should be able to select the entities. So supplier A works with entities 1, 3 and 5. So 2 and 4 don't have, so but you should be able to map them to that. And then supplier A, entity 1, works with one contract with that supplier, one specific contract with that supplier. And that's how your master data should really work. And for me, I have seen it work like that in organisations, and it works really well. So when you've got supplier data set up just once, it works the best. It's vital you also have a robust system in place for setting up vendors. So excuse me a minute. So ideally, and again, a number of organisations are moving down this route, it should be automated. So you're actually relying on the supplier to fill in most of the information. And it can include things like indemnity insurances, intellectual property rights and things like that. So, but you are relying on the data from the supplier. So you know it's as accurate as it can be because it's come from themselves. Another thing that is useful on your supplier master data is being able to grade suppliers. So what I mean by that is you might have category A are all your corporate contract suppliers, your framework agreements, etc. Category B might be your preferred supplier list. So you know exactly who you're dealing with. And category C, for example, might be your non-compliant suppliers. So that's your maverick spend where somebody's picked up a phone, ordered something, an invoice comes in, and as a company, you have an obligation to pay it, because just by that phone call conversation is a verbal contract. So you might want to grade your suppliers like that in the supplier master data, so you can then report on them in terms of, you know, how many instances have you had of the non-compliant instances. Another check that in terms of setting up single supplier master data is from Companies House. And this is a practice that I've operated in a couple of organisations I've worked for. And the reason being is to stop any collusion. Now, it might sound a bit odd, but if you run something through something like Dun & Bradstreet, you can actually see, you know, the directors. So if you've had a request to set up a supplier from somebody within your business, and you see that their surnames are the same as somebody on those directors, then it can cause alarm bells to ring, because there could be some collusion there. And we have actually, you know, in my experience, I've actually referred cases to internal security to investigate for me. And they've found that, yes, in actual fact, you know, so-and-so is the wife of one of the directors, or so-and-so is the husband or the partner of one of the directors of that company. And that's why they're trying to lead that business down that road. So it's the collusion. And then another thing that you could do in terms of supplier setup, and this might sound odd from an AP point of view because we're paying out, is credit checks. Checking the financial stability of a new supplier, because if their financial stability is in question, they may not actually be able to supply you with the goods that you want or the service that you want in the future. So credit checking is also good from an AP point of view, not just from an AR point of view. A relatively new process added in, and this is probably certainly over the last, I would say 5 to 10 years, is the checking of bank details. So we now, we do, there is software out there that can check bank details for you when you put them into a system. But equally, we all now have been, well, I would say the majority of companies have experienced some sort of fraud or other, or attempt at fraud. So a new process when we set up a supplier now is the independent phone call to the supplier to check their bank details, which I think from an AR point of view, they're getting more used to it now, because I know AP teams I've run in the past where we've done this, we always ask for we independently source the telephone number, then we ask for the credit control department, and then we verify the bank details over the phone with somebody. So that way we know we've got the right bank details and somebody's not trying to scam us out of money. So my supplier master data also should be subject to regular housekeeping. This is absolutely vital in terms of keeping it valid. And we know you'll find where if supplier's been set up and over 18 months, for example, you've never used them. So why did we go to all the trouble of setting them up? A supplier that's been set up, but we've only used them 18 months previously. We've not used them in the last 18 months. So all of that sort of aspect needs to be looked at so that you can deactivate those suppliers so they're not there for purchasing, because they may have been removed from your preferred supplier list. So you might want to, deactivate them for that reason. And also, you can see from doing the housekeeping how many, if you are grading your suppliers, how many you've set up who are actually non-compliant. Basically, they've not been a corporate contract and they're not on the preferred suppliers list. Somebody's just done some maverick buying. So, on to the next one, please, Chris. So, invoice automation. This probably is not any surprise, but for me, invoice automation, you get time savings and cost savings from it. So I don't know if anybody out there measures time to process in terms of when an AP invoice is received and to when it's actually paid. A fully manual process can take up to 90 days to get invoices paid. And this is because, it might not necessarily be paper, but it could be a document and an email backwards and forwards to try and get it paid. So the industry says that a fully manual process can take up to 90 days to get invoices paid. Now, if your suppliers are on 30-day payment terms, you're already going to be late with them. So automation will reduce that very much in terms of getting it in, getting the invoice in, getting it checked, and if it needs to go out for authorization, getting it out for authorization via a workflow. Or if it's fully matched, three-way match, then it will just pay on its due date when it's due.
Give us I understand what a three-way match is, but can you tell the others on the call what a three-way match is, Diane?
I can, yes. So a three-way match is you've got a purchase order for £10. You receive your goods. So you go in and goods receipt for £10 or 10 items. And then the invoice comes in for £10. So 1, 2, 3. That's your three-way match.
Okay, thank you.
No problem. And cost savings, obviously. Paying invoices on time because you've automated the system, because that does help, as I've said. Manual process can take up to 90 days, an automated system is much faster. You're paying more invoices on time. So therefore, you're saving yourself in terms of late payment penalties. And you can even make savings in terms of, so if you are paying on time, then if working with your procurement team, you might be able to negotiate early settlement discount with suppliers. So again, you're making some cost savings there. So time savings and cost savings. And it's not about people losing their jobs here. And I'll go on to that in a later section, but it's about automating it. So you save time in terms of time to process and costs in terms of actually making savings. You're not paying out late penalty payments, and also you might be able to take advantage of early settlement discounts.
I have a quick question for you,
yeah.
John. You talk about human error there. Unavoidable. 20 to 30% of all invoices have to be treated or as an exception, right? I mean, one of the things that I'm bang on about is organisations like from the AR side, making sure that they have measuring billing accuracy, right? So that when it actually goes out the door, it's not going to be disputed, etc., etc. So that fundamentally, that is what that is. Is that right? So it's the accuracy of the invoice that comes in is something that you have to do something with.
Well, it's more about an exception. So so we talked about three-way match. So that there tend to be purchase order invoices, but then you've also got exceptions. So things like that would fall into exceptions are things like utilities, council tax,
right, yes,
things
yes.
and it's dealing and also the people in your business. Everybody thinks they're an exception. Everybody thinks they don't need to follow the process. And that, from an AP point of view, that's what takes up the time, dealing with the exceptions, because the exceptions can actually then become the norm, and that's what you want to avoid. Your exception, there will always be exceptions to the normal AP process, but you want to keep that exception list to the minimum.
Yeah, it's the same in collections. You don't want to have to different collection streams for everybody. You've got to make sure you do
exactly. Yeah,
okay,
exactly.
sorry to interrupt.
No,
Anyway,
it's fine. No, it's fine. Ask the question. So automation for me as well means less mistakes. So if it goes through the system, as long as things like, and this is why supplier data is so key, as long as you've got suppliers all set up and the bank accounts and everything are correct. And I don't, you know, in some instances, some ERP systems, you also have GL codes and cost centers applied to suppliers. So, but if all that is set up and the invoices flow in through whatever system you've got, OCR, Post, just email, if it's extracted, whatever, and your system reads it properly, applies it onto your ERP system or your payment system, there's less mistakes. So people are not matching it to the wrong purchase order. They're not matching it to the wrong supplier. They're not matching it to the wrong site, for example. So they might have an invoice for IBM, but it's actually from IBM Finance, not IBM Systems. So, you know, it comes in and it gets matched to IBM and it's actually for a different company. So with automation, that all of that, and I won't say guesswork, but that basically human add-on is taken away because it should flow through. So if you've got an OCR system, it's taught to read things like the postcode of a supplier, so they know exactly what supplier it is. Maybe it might be the VAT registration number of a supplier, something like that it has a hook to get into so it can apply the right invoice to the right supplier. If you're bound to produce a payment performance report, and I think Chris is the other Chris Who is going to talk about this as well, for the government, it's much easier to do with an automated system because, and I know a lot of companies still report on their payment performance from the day of the invoice date. But for payment performance practices, for the government, it's from date of invoice receive date.
Right.
So,
for those of you that don't know this is the duty to report, which is all organisations over a certain size have to report their payment practices into a government website, which then enables you to then go in and look and see how they pay their bills. And of course, it's something that the organisations themselves actually put on there. You know, we pay our bills like this, and so that was something that Dan Hancock's mentioned last week. It's one of the things that he uses in his credit form, in his credit checks. After we had a conversation, he's added it to his credit check. So now there's like a double check that looks at when you look at your when you do your credit report, you can also see whether or not it matches there. So one of the things that we've done for the APQ activity, the accreditation for the AP organisations, is we've looked at the duty to report versus a credit report, right? So if a company sort of says, well, we've got if the credit report says, oh, they always pay 10 days late, right? Then we have a look at the duty to report and see if they're consistent, right? To make sure that when an organisation goes for an AP accreditation, in terms of yes, we pay our bills and we do the right things, we actually check that to make sure that they actually do, right? Because it's a completely separate thing. So are they reporting in the same way that they're actually behaving, which is something that we included in the APQ program. Sorry, Diane, go ahead.
No, it's fine. It's fine. I mean, duty to report payment performance practices is not the only compliance reporting out of for an AP. Obviously, VAT is important in terms of making sure the VAT return is correct. And again, it's much easier to make sure that is right if your system's automated and it calculates the VAT correctly. Obviously, you might have variable VAT on an invoice, but as long as if you've, one, be aware of it, and two, make sure your system can deal with it. And then obviously these, it might not necessarily come into for AR, but for CIS, as construction industry scheme reporting. Again, if you've got an automated system, it's much easier to produce those reports, which are a regulatory requirement. So moving on to the next one, which is controls. So I've worked in several companies where they are regulated by SARBOX. So it has to be a very well controlled environment. And also at the moment in time, and certainly over the last 5 years or so, the biggest control AP need in place is to prevent fraud. Putting controls in place of having an independent review of new suppliers, callbacks for bank details, as I referred to earlier. So having this correct in your supplier master data is key, so that you know you're paying the right supplier, the right amount at the right time. Having a no order, funnily enough, having a no order, and I've said no order here rather than no PO, no pay, which I know a lot of organisations use, but certain organisations, and so currently the one I work for now actually has 3 different ordering systems. So they do have a purchase ordering system, but they have 2 repairs ordering systems, which quote different numbers. So it's if you've got that in place, it's a good control, because it should. It's not always the case, because you do always get people who think they are an exception. It should prevent maverick spend, and that is, when I say maverick spend, it's the people picking up the phone and ordering what they think that they want from who they like. Rather than going down the corporate contract or the preferred supplier list. And the thing is, suppliers, as long as you've communicated, you have a no order, no pay policy within your organisation, and you've communicated that to your suppliers, suppliers should know if they take a request for something from somebody in your organisation, they need it accompanied by an order number, and that is a control that should be in place. An approval framework is another control, and one that's obviously loved by auditors, and we always like to please auditors. So approval framework in place is vital for me in terms of making sure, and again, it comes down if you can automate that rather than sending emails backwards and forwards to people. But if you can automate that so it goes to the right person, so you've got that hierarchy built into your system. So new suppliers go to the right people for setup, for approval of setup. Invoices, if they need to, go right to the purchase orders, go to the right people in terms of value, so that you know you've got the approval to spend that money in place. So that is an absolute vital control to me in terms of making sure you've got an approval framework. Another control is duplicate payments, which I'm sure anybody who works in AP has suffered from, but it's not, for me, it's not necessarily the duplicate entry. You will always get duplicate entries into an AP system. You might not get many because you've got really good controls in place, but there will be the odd one that slips through the net because of a fuzzy match or something like that. As long as you have something that will capture those before the money leaves the business, that is the key thing for me. That's the key control, is you don't want that money leaving the business because it's already been paid. So it's not, and it's also showing how much you have prevented. So you might show that, yes, we've made 10 duplicate entries for £40,000, but in actual fact, nil left the company. So it's actually quite a good KPI to measure performance in terms of, yes, the controls are working.
Do you have a KPI for fraud as well? That's one of your key ones as well, isn't it? The ones that you prevented if you get all things coming in that don't exist.
Yeah, absolutely. Okay. And then also, again, in terms of correct reporting in place, because I've said before, VAT, duty to report, CIS, they're all a form of control in terms of making sure that your system can produce those accurately and they are submitted on the right day. So again, another form of control. So you want to go to next one, please, Chris?
Yeah, okay. There we go.
So I'm sure this will be music to the AR communities here, is in terms of payments. So obviously, at the end of the day, as an AP manager, all I want to do is make sure I pay my suppliers on time. I'm not sat there, and I would say probably 25 years ago, there was very much, well, it's our money, we're keeping it for as long as possible. You know, that old adage, pay on the red demand. I would say that has certainly over the last 20 years, that has disappeared. With things like prompt payment code and duty to report, AP want to show themselves in a good light and make sure that we're paying suppliers on time. So
hello.
Hello.
Go ahead.
Okay,
Go ahead. Sorry.
Yeah, sorry, it's all right. So again, paying suppliers on time has got to be a key KPI for AP departments. Something that's really reduced, certainly over the last 18 months, and I can give you an example. So Great Places has about 5,000 suppliers, only about 3.5 of them are active. And we did have, you know, quite a number, probably over 100 suppliers this time last year, being paid by cheque, except they weren't. Because of COVID and everybody working from home, nobody was allowed to go into the office and do the cheque run, which had to be done on a specific secure printer that actually printed cheques out. So we weren't able to do that. So we had 3,500 active suppliers. We had about just over 100 we paid by cheque. Today we've just got one supplier we cannot move off cheque. They will not move off cheque, that's all. So that is certainly in terms of removal of cheques, because processing cheques in terms of having to take them to the bank and things like that, it's an expensive process. I mean, I know we've now got cheque imaging, but it doesn't seem to be quite as good as they said it was going to be in 2018. But trying to remove cheques altogether has been a much better option, which we, like I say, we've done, and I know a lot of other companies have done, particularly over this last 18 months, because they've almost been forced into it. Having a fully automated payment process, including approval, again, is great in terms of making sure that the money goes out the door on the right day, so the suppliers get paid on time. And we've even seen things where, so the payment runs run in your ERP, but then a macro will pick up that payment run, send it out for approval, and then that can be all approved, checked and approved online, and then all you're doing is clicking a button and an email then is generated back to the AP people to say, yes, this is all been signed off. And then it goes through a secure file transfer to go into one of the banking systems. So for example, at Great Places, we use Access Pay, and Access Pay will also do all the checking of the bank details for us. And it means with Access Pay, it's just a login. We don't need a key fob or anything like that, because all the payment process beforehand has all been securely run and approved without basically manual intervention. Nobody can touch the payment file, and that's the key. So nobody can mess with it to try and put their own bank details in, for example. Frequency and date. So I've put in here about improved working capital. So I worked for many years for BT, British Telecommunications, and we had Ernst & Young come in and do a working capital project. And one of the things they did with the AP, so BT used to pay their suppliers on a daily basis. So Monday to Friday, they did payment run every day. Ernst & Young demonstrated by moving to a weekly payment run, and specifically on Monday, and the Monday was for the next 2 years, they would save £5 million in working capital. So that was, it's quite a significant amount of money. Just by, I mean, there was other things. I mean, the actual working capital they saved. There was other things they did, not just on that one point about the payment run, the frequency, and can impact working capital. So, it might be worthwhile doing some analysis yourself of what your working capital looks like and what your payment runs look like. So going back to the controls again in terms of regulatory compliance for payments. So obviously we're making sure that if CIS needs to be deducted or paid or whatever, we can do all that through that automated payment run. So again, it's good. Automation is good for AP. Next slide, please.
Yeah, you've got a couple of minutes left, yeah?
Yeah, so my last is supplier relationship management. So this is really a key aspect of successful AB department, is get to know your suppliers, do your analysis. Who's sending in multiple copy invoices, for example? Why are they doing that? Get involved with them, get meeting with them. Ensure they know, your suppliers know what you need to do, what they need to do to get their invoices paid on time. So what is it? So talk to them, meet with your key suppliers on a regular basis, reconcile supplier statements. This can provide a first indication something's going wrong somewhere. So for example, invoices going missing. So if you're doing your regular supplier statement reconciliations, it's a fantastic indication that either everything's hunky-dory because it's completely reconciled every time, or something's going wrong. Get remittances, and I'm sure this is another thing with for AR, get your remittances out in a timely manner and make sure they're going to the right place. The number of times I've come across requests for a remittance from a supplier because it's gone to a named individual in their company who left 5 years ago. So they were never getting the remittances. So that's, again, back to your supplier master data, make sure it's right. So make sure you've got, where possible, generic email addresses for remittances to go to. And then rather than data processing, supplier relationship management offers AP officers the opportunity to develop some skills in other, so it could be analytics, problem solving, so dealing with queries with suppliers rather than just data processing, and also customer focused, because, and this is something that we were always taught at British Telecommunications, remember your supplier may be a BT customer, so treat them as such, be customer focused, don't treat them as the enemy. So that was one of the things that I was taught by BT. And then in these, and as I've said it before, for me, in these days, AP and AR do have a common goal with prompt payment code and duty to report. Ultimately, we want to get invoices paid on the due date, when they're due, to avoid any reputational damage or, discontent. And like I said, always remember, your supplier could also be your customer. So having said all that, we do have some issues with invoices, shall we say, rather than accounts receivable. So we mentioned before about being insistent payment is made by check. So we cannot persuade this one supplier that we're dealing with that backs is the way to go. They are insisting they're paid by check, but it just causes, at the minute particularly, it causes no end of issues sending multiple copies of the same invoice, because it's, rather than, for me, it should be just, pick up the phone. I mean, it's not that easy these days with people working from home, but, email in to say, don't just send a copy of the invoice, email in to say, why is this invoice not been paid? It's now overdue. Supplier statements are another indication of, don't be sending multiple copies of the same invoice, because we're then having to handle it twice, 3 times, 4 times, and it's taken us away from the day job. Suppliers, and I have to say, local authorities are mostly to blame for this, insisting an invoice is sent via the post. In this day and age, we shouldn't be getting paper invoices. Another bugbear, particularly if you've got an OCR system, are free form invoices. So the number of invoices I get, and the purchase order, because it's free form, the purchase order on one is over here and another it's down there. The OCR system can't cope with it. So everything then has to be validated, all the sections. Another thing with freeform invoices I've found is people don't seem to be able to add up properly. Now, it could be roundings on their side, but, I'll get that of, 28p and the net of 36p, but the bottom figure comes out at 30, ends in a 3 rather than a 4, for example. So, it's things like that, free-form invoices. For us, an ideal world would be an invoice template for all accounts, and they have a box to put everything in so that it's always in the same place. And so sometimes we also have issues with the format of supplier statements. So we may get an invoice in, which is fine, but then the supplier statements actually have different columns on. which don't really tie up to anything, and they'll have their own reference numbers on and things like that. You know, from my point of view, it's like the date of the invoice, the purchase order number if it's got one, or the order number if it's got one, the invoice number as quoted on the invoice date and the amount. That's all we need on a supply statement. So that was it, really.
Okay, thanks very much. I have a question for you. When you talk about segmenting customers, and I'm sure this is a question that ran through the mind of a number of AR people on the call. When you segment customers, you grade them. You know, you put some preferred suppliers, etc., etc. Does that grading sometimes determine how quick you pay them?
No, because that will be down. So I'll give you the example that we had at British Telecom. So we had category A suppliers were all contract framework agreement, and they would have different payment terms. Right. Some at BT had 120-day payment terms. Some had 30. It depends on what they provided and what procurement had negotiated. All preferred supplier list suppliers at British Telecom were on 42 days. And I'm going back a few years, so it may have changed, right, but they were on 42 days. So
but would you say that in some organisations, you know, when supply chain is under pressure and cash is under pressure and stuff, that you know that they're going to look at their supplier base? I mean, to be brutally honest, I would, right, and sort of say, you know, we need to determine which ones we're going to pay so that we can keep the presses running or whatever it is. You know,
yeah, I think definitely. Definitely, Chris, and I know that was a massive thing. Like I said, 20 years ago, that was a massive thing. It was all about how can we keep the money as long as possible. So who do we not pay? Who do we not pay? You know, and then we used to have to go through lists of people, and we need to pay them, but they can hold off. Well, we'll pay them, but we'll pay them on the first of the month via a chaps. So they still get the money on the same day they would have done, but it's still in our. This is usually at year end. It's still in our books at year end. So yeah.
Yeah. The other thing, I think a lot of organisations, it's not, you know, when you're in a big organisation, you're paying your AP from a large organisation. It's not the fact that, you know, you don't, in a lot of cases, it's not the fact that you don't want to pay. It's just that the process is such. You have to follow the process, and the process is, you know, if your invoice is right, it will go through. If it's not, it won't. Right, and so it's mainly process issues that slow this stuff down, rather than you know an unwillingness to pay in organisations. And it's interesting. You mentioned Ernst & Young, and I'm mentioning no other consulting firms. I did some work for a client a while back, and they had a quote working capital consultant in from a large firm on the other side who was looking at AP. Right. Yeah. And what they did was they said to this particular client, oh, well, yeah, what you need to do is to pay your bills, tell all of your suppliers that you're going to be paying them on 60 days now, and you will save X number of million. And then they presented the client with a bill for 5 million quid for that advice. And I was just like, what? You know, it was quite astonishing. There's little, you know, with AR. You know, it's a complicated thing, but I think what we've seen with this, it is also a very complicated thing in AP. It's not as easy as, you know, getting an invoice and paying it. There's all sorts of stuff that goes on, and I don't think that
most people think.
Yeah, and I think we in the AR community don't really realise that as much as we do, which is one of the reasons why I want to bring this session on. So thanks very much for that. I'm going to stop sharing this. I'm going to have you got your session ready to load there? Karen?
Yep. Do you want me to?
Okay. Yeah. You should be able to share your screen now.
Right. Okay.
If not, I can.
No, it's okay. Oh, hang on. I've lost you on that one. Can you see that?
It's coming up. There it is. Yes, we can see it. Great.
Okay. Do you want me to start, or is there any more?
Yes, go ahead.
For Diane?
Go ahead. Yeah.
Okay, morning everybody, I think just I just want to go through, oh wait a minute, I don't know, hang on, how do I change it? Oh that's it, right, sorry Chris, not that okay. Technical. Okay, so I'm Karen Holstock. My title is Head of Financial Shared Services at ARCO. People that have seen this my presentation previously will know obviously what ARCO is. Health and safety company, been very much in demand, to say the least, over the last 18 months. And I think that has changed the way that we do look at things within the accounts receivable team. Just to give a breakdown of where we are, you know, we're a massive organisation considering we started from just a shop in Hull, so we've grown quite a bit. Very similar to Diane, I don't just look after AR anymore. I look after accounts payable, so completely support everything Diane has just said and live and breathe it and feel it. And also obviously do transactions and payroll. But today, for me, you know, my bread and butter is accounts receivable. Been doing it for 30 years now, so and still love every minute of it. So even though I am getting pulled from other areas, Alan will know that from my perspective, I still interfere too much, or he tells me I interfere too much from that side. Give a bit of a breakdown from our perspective. We don't just look after the ACO products, we look after the ACO safety services debt, which is about people going up, as you see, cleaning things, tidying things up, London Eye, things like that. And what I have found, and coming from a utility background as well, you know, products, being able to feel and touch is easy to collect money, strangely enough, from than something that is just not there, but the people need to have. So from our perspective, you know, we do look after, you know, quite a lot, not just the debt, we look after queries, and we have an automated system to post cash, but we have to do exceptions. And from our side of it, most of our customers are insured now, majority of them insured, which again does make me sort of being able to sleep easy on an evening. Okay, so, but what's the best practice? So, from our perspective, you know, it's about knowing your customers. I think this is one of the key areas from my perspective is know which customers are the ones who can't pay or won't pay. You find, like we've just said, the key account customers, the big customers will pay, but it's just basically down to, it might not be, there might be missing invoices, etc. So what we do is we've split our teams around saying, well, we know those ones are the ones that will pay it. They just need to be made sure we're checked, reviewed. And, you know, if we send out 1,000 invoices a month to them, if 99 of them get paid and the others don't, there's probably a chance something's gone wrong with them. So don't wait for months on end before you chase them to find out what it is. If they haven't got paid in that month, there's something wrong. We also do a lot around credit limits. Diane's mentioned payment performance. When my guys when I get challenged from the sales guys to increase payment terms, which happens all the time, because we've said, like, companies just automatically will say from next month we're paying you on 60 days. I go on to that, you know, I mean, obviously my team report on it from the AP world, but from an AR, I go on and say, well, are they actually telling the truth? And I've batted quite a few back through that payment performance to say, well, you say your standard's 30 on this, so why are you asking for 60 off us? So I do use that quite a bit from our credit perspective. And we are, I suppose, very challenging on our credit limits. So we start off low. We don't just go in with like whatever it says on the credit, you know, Dun & Bradstreet on Experian. We do go low and then we build up from there. And also, you know which ones do need to be, you know, challenged each month. You know that if you don't ring them, they're not going to pay you. So once again, you know, we have a team, an outbound team that know have got to just make that phone call or send them the email to be chased. Okay, processes. Now, this isn't a plug, but from my perspective, you know, getting all your ducks in the row to do the CICM was a great way for us, A, to get a massive tick in the box to say, yep, they're all okay and you're right, but also to make sure that, you know, we're not missing anything. So, you know, that's really, really helped us make sure that actually we are doing what with best practice and we are doing what's on the tin. So that gave us a you know, and I'm not trying to plug Chris in the team, but, you know, I've already written the AP one down because I'm thinking, that sounds interesting. I might have to have a go at that for my AP. Robust collection process, you know, have it automated as much as you can, you know, get it so they all get emailed. You know, we email all our overdue letters, we send all our statements once a month. We're telling customers all the time. So once again, you know, our customers can see, oh, well, hang on a minute, I denied all them outstanding, and ask for copies, etc. So we're informing them every minute, you know, every month on what's happening and, you know, what they still owe with us. Once again, if they get put on stop with us, it's not a surprise. It's like, well, we've told you enough, you know, so you know, but it's got to be automated. If you're leaving it down to individuals to send letters or do that, you know, it becomes time consuming and people get missed. Continuous improvement, you know, don't stand still. You know, we've just finished our year end. We're now looking at, well, what's next? What can we improve on? How can we, you know, get better? You know, we've got quite a lot of headcount. It's not about headcount for me, about reducing it. It's about getting them out the noise. So, you know, if you're getting loads of emails in where people have got to send, you know, copy accounts or statements, well, why aren't they getting them? You know, look at the root cause. And fraud, you know, for us, it's about being one step ahead. You know, we've had recent cases where if we hadn't put all our checks in and checked, a customer could have took us for a significant amount of money. So again, it's just being that one step ahead to make sure that, you know, you do all your checks. If they've overpaid, have they actually overpaid, or is it that they've paid a check in and now they're asking for some money back, etc. So it's just having that sort of all round to understand it. This one for me has been our biggest achievement, which is the stakeholders. When I came into the business 6 years ago, credit control was just seen as a blocker. Didn't, you know, they put everybody on stop, etc. And over the last 6 years, working with the sales guys, giving them the copies of their age of debts, showing them where their customers are not paying, helping them to have the conversations with the customer, you know, has actually got in the last probably, I'd say, year and a half, where the sales guys will ring us and say, oh, I'm just getting nowhere with this. Just put them on stop. There's nothing else to do. And 6 years ago, to actually have a sales guy telling me to put one of their customers on stop was never heard of. So for me, you know, that's an absolute great way. Obviously, COVID has helped because we've had an extra 300 sales credit controllers sat around, and so it'll be interesting. And we've had our best year from a debt perspective, so it'll be interesting to see how it works this year. But cash flow, pushing that out is key, and everybody's fully on board that it isn't, you know, the scenario of it isn't a sale until it's collected. We have finally got all our sales guys involved in that. And last but not least, obviously people. So again, structure wise, we mix and match our staff. We don't, you know, there's certain people who just love to outbound ring all day, maybe only work 2 or 3 days. We let them do that if that's what they want to do. But what we try and do is give everybody a bit of variety. And you'll see when I go through my KPIs, you know, we don't target people on how much cash they collect on a daily basis, because what we do is one day they might be doing phone calls, but next day they might be doing emails. The day after, they might be doing queries. And what we have found is actually our team being able to resolve the queries there and then, rather than passing it on to somebody else, actually gets it resolved, because you can guarantee, you can tell the vendor or the customer, actually, you know, we'll get that out to you by the close of play, and it happens. Training, don't just assume they want to collect. You know, we bring new people in. You know, some of them never have collected before, some have never even rang up and asked for a debt. So, you know, training is vital to, don't just assume that it's an easy thing to do. It isn't. You know, to ask for money or put it structured in a nice way of an email is quite, you know, a hard task to do. So, you know, make sure you give them the tools to be able to do it. And listen, feedback. I mean, our team, you know, we go in, when I first went in, they had hundreds of ideas. They're doing it and living it and breathing it. So, you know, try some of them. You know, the staff of the ones that have got, you know, majority of the ideas or can see best ways or changes to do things. And we take that on board. Lindsay Jones, who's, you know, my CI improvement person, she has regular contact with all the staff to say, right, what's bugging you now? What can we do? What can we change? And then last but certainly not least is, you know, have some fun along the way. You know, our year ends, you know, we've really done some different things through COVID. If someone had said to me, we'd put a panto on throughout, you know, COVID, you know, online and all stuff like that. But, you know, you can still collect the cash, you can still have the fun. We just haven't had the nice things in the office, but we've done other things as well. So, you know, there's ways round everything really. Okay. Can I just say I didn't do this? I did the slides. I didn't do the pictures. I got someone to help me do the pictures, so I'm not taking responsibility of the pictures. Okay, so just some key measures for me. Obviously, one of our key things is to try and keep our bad debt provision off our P&E book down. So what we do is we target our numbers prior to it dropping in. So Alan and Sam on the team really have to focus on making sure debt doesn't drop over into the provision pot. So as long as they can get it prior to that, and you know their main focus is as soon as it goes overdue to chase and be absolutely all over it, that they have to justify if anything drops over. And stuff does, because we know it does, but usually it's down to either it's going legal, you know, they've done a runner, or there's something physically wrong with the invoice and it's a large account and you know you'll get it paid once you've got it resolved. So we also do inbound, outbound calls. So again, for us, it's just about an inbound outbound call. So as long as, you know, my team are noisy is how I like to hear it. You know, we're going in, starting to in the office in a couple of weeks, you know, and we're sitting on a new office with, you know, different people, and they're all saying, well, I hope you're not noisy. And I'm like, I expect them to be noisy. And if they're not noisy, I want to know about it. So for me, you know, just having an idea, and again, volume of queries. If our queries are down, then that means there's no reason why we can't collect the cash. We are targeted on how much cash we collect from a cash flow perspective. So again, you know, from my own role perspective, I have to watch the cash coming in as much as the cash going out. And we obviously have to make sure that, you know, those numbers add up. So if I'm, you know, not that, you know, we ever have or would, you know, but like Diane said years ago, you would be doing it literally, can I afford to pay that, can't I? When now, you know, you just pay everything on the basis that, you know, your cash is coming in. So again, payment terms are key to keep to 30 days and not extend them. Because sometimes, obviously, if you've got to pay your suppliers, then that has an impact. And again, emails and inbound calls. So from an email perspective, I want to know why we're getting emails, why, what's the cause of them. So we very much count how many emails we have. So I'm sure you'll all live and breathe this one. So I asked my team what was the main ones, and even though I probably knew them all off the top of my head from what I hear from my AP team, but, you know, having a remittance, you know, having the invoice number on the remittance, having the date that it comes into the bank as well sometimes helps, because we'll get a remittance and we're like, well, when's this due in? Doesn't so much, from our perspective, because we've got a cash automated system, it'll pick it up. But then when you have a remittance sat there with no cash against it, you're like, well, when's it coming? But have the information on it so it can match it. So, you know, Diane's talked about matching the invoice to get it through the process. For me, it's about getting it matched against the remittance, because if the information on the remittance is right, my cash automation system will three-way match it and post it. So again, it's win-win all round if we get, you know, the data right. We find that obviously when we do ring our AP teams, and again, you know, AP teams, and I'm sure this goes for a lot, it's got blocked, but nobody's told us. It's like, how are we supposed to know that you're not paying it for whatever reason, whether it's price, quantity, or whatever? Tell us, just let us know. And then that way we can actually try and help get it resolved. Because if we know the reason, then that will help. We have this quite a bit where we will ring customers for the invoices and they go, well, I ain't got time to tell you. And are you the only customer? You know, there's sometimes some AP teams or businesses out there think that as soon as they send a payment in through backs, and you all know how sometimes it can just literally come as a line for 20 characters, no information, and you're like, how am I supposed to know who this belongs to? So again, it's just don't assume, you know, they're not, and we need the information. And we're finding this more and more because AP teams are going more portal based or going automated. Obviously, they're reducing headcounts within their teams. We're finding that they'll block it, but they don't know why. They ain't got any information, and they just turn around and say, well, you have to contact your buyer, go back to the person who's ordered it to get it. Well, as an AR pet team, we might not know that, especially if it's a large organization. So for us, it's, you know, we get this quite a bit back of, no, I can't help you. So you're in sort of limbo then to say, well, what do we do? Do we just, you know, and unfortunately, majority of the time, the only way we can get that sorted is by putting the account on stop, and then somebody will scream at us. So again, it's, you know, for us, it's a bit of a challenge on that one. And that's me. Any questions?
Okay, yeah, I do actually have some questions. If you can stop sharing your screen there, Karen.
Yep. There
we go. I've got a few questions here for both of you guys. Let's go back. So AP, do you generally, as this is one for you, Diane, do you generally work on a weekly budget on payments?
No.
There's no,
yeah,
right.
Yeah, we are very much driven by, and certainly over the last few years, with duties report and prompt payment code, very much driven by due dates of invoices.
Right. Okay.
And that's what, and it can be, you know, a due date in terms of contract date, so, or due date in terms of the supplier, what's their due date, or what are our standard payment terms. So, you know, you might be operating to standard payment terms in a company, but that's what drives when they get paid.
Okay, so what about this one? Payments holiday. This is obviously there's something that's come up specifically during COVID as well. Payment holidays. How common is that in the AP community? I mean, that might be one for Jamie actually. But what do you think, Diane, on that?
Well, it's certainly not something that we've operated at Great Places, and my previous organisation, it wasn't, because that was just at the start. I left there just at the start of COVID, and that's certainly not something that we operated there, a payment holiday.
Right. Okay. I'm just trying to check and see if Jamie's still on. I think Jamie might have dropped off.
I'm here.
No, he's there.
Are you there?
Yes.
There you are. Yes. Hi, Jamie. Sorry. Yeah. Yeah. So payment holidays. This is something that's been mentioned by somebody. Is how common is that?
It's very, I'll be honest, it's very rare. I mean, this is probably the first time I'm hearing that, actually, Chris. And it's not for me as an AP professional to give an excuse, but a payment holiday sounds a little bit like an excuse, and I think Diane will probably agree with that. So it's not a regular practice. If you're seeing that from a credit community point of view, let us know, and we'll investigate. But Diane's absolutely right. We don't see that regularly used across the piece.
I would say probably, Chris, 20 years ago, it was a more common practice, but that, like I say, with prompt payment code and duty to report, it's a practice that seems to have died out.
Right,
which is good for suppliers.
Yeah, I mean, Karen, as somebody that straddles both areas.
I mean, from an ARCO, no, definitely not. We've never done it, but I have got customers that are on payment holidays, and it's built into contracts. But probably out of all our customers, it's probably 2 or 3, if that, and it's old contracts. So yeah. I'm not seeing it as much as what I first did when I first went in there 6 years ago. So yeah.
Right. Okay.
So Karen, that's more of a negotiated payment holiday,
yeah,
into an old contract, rather than a supplier just saying, right, well, we're not paying them this month.
Yeah. What we get a couple of, again, is when it's customers' year ends and they say, can we, instead of paying you on the 31st, can we pay you on the 3rd instead, you know, that type of thing. So it's just so that they've got more cash in the bank at year end, and then they'll pay us. We've got maybe 2 or 3 customers that do that to us as well.
In exactly the same way that the AR community would try and bring that forward as much as possible. So they've got your cash in their bank. So
absolutely,
yeah, the same thing, isn't it? Yeah.
Yeah.
So yeah, I like the comment about a noisy credit department. Absolutely, I agree with that. I went to one particular client who was in the north of England. I won't say who it was, and I walked into the department with the credit manager, and I asked, and it was deathly silent. It was like tumbleweed, right? And I turned around to the credit manager and said, "Where's the credit department?" Looking around, and he said, "Oh, this is it." I was thinking, what? You know, there was nothing on the walls, there was no noise, there was nothing. It was just like, it just looked like a normal accounts department. Right, or a bunch of accountants all sitting there looking at spreadsheets, and you're right. A noisy credit department is a good thing. The other one, I like the comment that you made about getting people involved. getting people involved in the decisions and the continuous improvement, Karen, that you mentioned. And that's exactly what we do as part of the workshop approach for CICMQ as well. It's not the managers that actually come up with the responses and the initiatives and the methods and procedures. It's the teams, and that's one of the reasons why we do the workshop approach. So that's great. So, well, thanks very much indeed, Karen. There's going to be some other ones here. What have we got? I agree with the polite art of debt recovery. We shall say tough tactics only cause tough resistance. That's very true, actually. It's quite blah blah blah. It says payment holidays are common at 80s and 90s. Key to success is both AR and AP collaboration. Couldn't agree more, Jamie. Right. So what I'm going to do is I'm going to put a poll up there now, and then we'll move over to Chris. So the polls. Let's go to the polling. So these are a few questions, and I'd like you very much to answer them. When we get to about 80% of the people on the call, we'll finish. So I'm going to launch the poll now. So if you can vote accordingly, that would be terrific. So the first question is, what is your primary role in your organization? Is it accounts receivable, credit management? Is it accounts payable? Actually, I'm responsible for both. And we've seen there's a couple of people on there for that. What are the key issues with your opposite number in AR or AP? It doesn't matter which one you're in. You can answer these questions the same way. I'm guessing these are probably common. Lack of communication, lack of knowledge, broken promises, or their attitude. We did a similar poll to this a little while back last year, and one of the things was that the AP community said that sometimes the credit people can be a bit aggressive. So I'll put that in there again, see what the response is there. Have you ever spent time with the AP or AR community within your company? So have you actually gone and spent some time with them and sat with them and see what they do? I think that's a really important thing. Do you think that as part of the APAQ, which is the new accreditation program for the Accounts Payable Association, or CICMQ, which is the opposite number in CICM accreditation programs, that organizations should sign up to a code of conduct between AR and AP, which during the assessment, organizations will be surveyed to make sure that the standards are met? So do you think that's a good idea? Okay, so there we are. So we've got up to 50% of respondents now. Okay, so the vast majority of people, it would seem, are in the accounts receivable, and we've got an equal number of people that are in both. Okay, as well. So right, let's. I'm going to end the poll shortly. So if you can continue to answer the questions very quickly, and we'll go to the poll. Okay. Right, so we're up to 81%. So I'm going to end the poll now, and then we'll get the results, and I'll share the results with you guys. Okay, sharing the results there. So accounts receivable and credit management. The vast majority of people on the call are accounts receivable and or credit management. We've got 11%, and one responsible for both, 19%. That's interesting. There's more people that are responsible for both on the call, which is interesting. So what are the key issues with your opposite number? Lack of communication, 56%. I think we can probably agree with that. Lack of knowledge of the other's function. Broken promises. They say things and they don't do them. So that's 11%. And their attitude. Only a very small number. So one person said their attitude. Okay. So have you spent time with your AR and AP community? Yes, regular sessions, 37%. 44% yes, but not often. Okay, yes, once and not since, 4%. That's one person did that one. And no, never, 15%. Shame on you. Shame on you. You really should do that, just to sort of get the other perspective of it. And then, do you think it is a part of APAQ and CICMQ accreditation programs that a code of conduct between AR and AP, which would be the assessment? So 78% said yes, that would be a good idea to highlight collaboration. So that's something that we've discussed. It's something that I've spoken to Chris Wu about this, and it's something that I think that between us, we're going to put something together on this. Once we've got everything going on APAQ, we'll introduce that as probably as a phase 2 type thing. I'm not sure that would work. 19%, and no, 4%. Okay, so that's good. So thanks very much indeed for doing the poll. That's excellent. I'm just going to close that down now. So the interesting one about there is communication. I made a note actually, and this is true of both. But sales, yeah, are responsible in both areas both areas are impacted by poor sales administration, basically, in terms of, you know, that one sales group will be selling into purchasing, and purchasing then you know, that goes to the AP community, and so AP are suffering from the people that sell to their businesses if they're not getting the right information, and your procurement guys are not getting the right information on the suppliers and stuff. So that's something. And on the other side, sales are out there selling to your customers, and they're not gathering information on their customers. And that, so it all begins at the beginning of the process, I think, and this is something that we need to accept. I'm doing a piece of work for a large client at the moment, and everything boils down to the way in which the sales process started. The actual process, I'm working on this with this particular client on billing, and the billing activities and the billing output is all related to how bad it is at the front end in terms of capturing customer data. In the same way, it's bad at the front end when capturing supplier data if you don't get that right. So these are the things that we need to think about, and understanding that on both sides, I think, is a really good thing. Noisy credit control, absolutely love that. So what I want to do, I'd like to have anybody got any comments or on things that they've seen or heard from on the call so far that they would like to sort of raise a question about while we're all together. I know Atul's normally quite vocal, but today he's quiet.
Oh, sorry, Chris, just one.
Yeah, John.
Yeah, my colleague Emily is on the call and she can't unmute herself, so I'll ask the question on her behalf.
Okay.
It's around the checking of bank details. Do any of our accounts payable colleagues on the call have any controls, or do you use the supplier portals for checking bank details?
So we check bank details through our banking systems. But equally, when we set up a new supplier or we get an amendment through, and this is not just where I work currently, but certainly the last 4 places I've worked, if we get a change of bank details request come through, we will always make an independent phone call to the supplier. So we will source them the telephone number, not from our supplier database, but usually from the internet or somewhere, you know, an old invoice maybe that we know we've paid and it's been successfully received. So we get independently source a telephone number and then call them, usually get through to the switchboard, but we always then ask for the credit control department to actually verify the bank details. And some instances we'll go through the full sort code and account number. In sometimes it's just the last 4 digits they'll be willing to give. Sometimes it's a sort code and the last 4 digits, but that's what we do in terms of validating bank details. And that's, like I say, not peculiar to my organisation I'm working in now. That's certainly been the case in the last 4 organisations I've been with.
Okay, thank
Well,
you.
if you have paperless direct debit and Aldis, which is something that lots of organisations are talking about now, there is a bank check account number algorithm that sits within that. That you would use, and that works. So
thanks, Chris.
That's part of that. And there is an algorithm and stuff that you can use. I think there's a banking forum or something where you can go on and check bank account numbers. I think I'm not sure. Google it. You never know. I think Mr. Google might have the answer.
Oh, that's all right. Thank you.
Got the answer for pretty much everything else. Okay, so what I'd like to do is hand it over to
Chris. Can I ask my question now?
Sorry, go ahead, Atul.
Yeah. As we move to automation, you know, most departments in AR and AP are being resource restricted or reduced. These manual checks we're doing of phoning up customers to check their bank details, how will that be affected?
Oh, I think it's because it's seen as a key control, it's not impacted. That's certainly been the last instance that I've had where I currently work. Certainly of the previous 2 places I've worked, that's not been impacted. In actual fact, resource was made to do that very activity because it was seen as a key control.
Yeah, that can be automated though, Atul, because there is, as I said, there is this bank check site that you can go to. So if you've got an RPA in there, you can actually get a link to that site to do that check, to drag it across, check it, and bring it back.
Yeah, no, that's fine. I mean, my concern is really, as we move more and more to automation, yeah, the lateral thinking, or the thinking in a different way, or unorthodox thinking, is not there. It's a process.
Yeah.
Walk towards the wall. When you walk towards the wall, when you get to the wall, stop, turn right, stop, turn left, stop. Humans tend to go, well, actually, if I go right, it will do this. If I go left, it will do that. Which is the best option? So the manual checks that we do to avoid fraud, the manual checks we do to avoid scams, the checks to ensure the processes are linked between AR and credit. Yeah, I think as we move to more and more automations, and also departments being restricted with resources, because the automation will say, well, actually, that's a saving. We don't need as many bodies. How will that affect AR and credit in the future?
That's the difference between automation and artificial intelligence, isn't it?
Yeah.
So that's the difference. And if you've got a set of controls, and you're going to be doing what Diane's done, and the list of controls that she's got up there, if that's one of the controls that you do to prevent fraud, and then when you're doing your supplier setup and your bank detail changes, or whatever you've got, if it's on your list of controls, then you would plug that in, wouldn't you? If you do it, and I see what you're getting at, Atul, but if it's a significant control, then you would put it in there regardless. Yeah, so I think that there is that, but that's the difference between which is the best way to go. That's artificial intelligence versus automation, so it's quite different.
I think, Chris, you mentioned before about measuring it. So the fact you might be paying, an AP assistant 15, 16 grand a year to do it manually, making the phone calls. But if you're then preventing, by doing that, you're preventing £2 million going out the business because you've got that control in place.
It's all about business cases, isn't it? Return on investment.
Yeah, exactly. It pays for itself.
Okay. Right. I think is Chris still on? There he is. Yes. So with people moving around on the screen here. Sorry, Naz, you wanted a question?
Yeah, I'm really passionate about verbal confirmation and what Diane said about a bank detail confirmation, because when I worked for Tatas, we were hit by a massive fraud purely because we did not have the process in place of verbal confirmation of bank details. So I cannot even emphasize how important that is. But with lockdown and with technology, what I've noticed is what's happening is people are doing Zoom calls to get verbal confirmation. And again, it's a return on investment. And yes, there's automation, and the RPA system that you spoke about is brilliant. But I think you still need one more step, and you can make a judgment call between what value you're paying the vendor and how much time you want to spend on spending on automation. So, but yeah, I can't agree more with Diane on this. So yeah, that's all I wanted to say.
Yeah, no, great. Okay. Right. So, Chris, great that you're on. Thanks very much indeed for joining us and for being patient. So, introduce yourself and go ahead.
Yeah, hi everyone. So I'm Chris Wu, one of the partners at Westgate Moore, and I'm just going to quickly share something with you which might make you laugh. Can you all see that?
Yes, indeed. Yes.
I'm just going to stop my video whilst I'm sharing screen.
The dark side they are.
So obviously you guys can determine which side of the fence you sit on. But yeah, so just as a brief introduction to who we are. So we've been working with accounts payable for the past 17 years, conducting recovery audits. So that's essentially where we help the accounts payable world locate any overpayments or erroneous payments that may have slipped through their nets over the years. But actually, one of the things that we noticed, I'm sure you guys in credit control will have experience of this, is that the vast majority of our clients don't reconcile supplier statements. Excuse me, mainly down to the time it would take them to properly reconcile them. And then combine this with the pandemic and this sort of seismic shift to new working practices and within the AP and the finance function as a whole, and the level of disruption this would cause would inevitably lead to an increase in human errors in an AP, and even in less of an urge and a want to reconcile statements. And then from the credit control and AR side, the likelihood of missing invoices and whatnot would increase the late payments. So it's actually at the start of lockdown when, let me just stop sharing my screen again. So at the start of lockdown, when I met Chris and Sharon, I was introduced to them by Jamie at the APA. And we went on this kind of championing the cause of how we can bring accounts receivable and accounts payable together. And then we start doing little campaigns, and it's culminated in this session today. But one of the things that sort of came to light, that's actually come to light today, is actually the lack of or breakdown in communication between accounts payable and accounts receivable. You know, and one thing that we've noticed that actually when working with accounts payable functions is that it does get to the point where accounts payable might actually accidentally deliberately leave the phone off the hook, so that they can't receive any incoming phone calls. So all that combined, we've created this new solution, which I'm going to show you now, called AutoRex, which hopefully, you know, there's obviously a lot of issues between accounts payable and accounts receivable and vice versa. One of them is communication, and one of them is the lack of reconciliation of supply statements. So we created AutoRex to hopefully, you know, try and alleviate that problem. So I'm going to share my screen.
Let me know when you want to cease the recording, Chris.
Yeah, do you want to knock it off now, Chris?
Okay, just before we do that, I just wanted to say we will continue with the demonstration once we've stopped recording. But I'd like to capture Jamie, if you're still on. I think you are. Yeah. One of the things that if I could just ask a sort of a comment from your good self with regards to what you've heard today, and anything you want to say to sort of support what we've been talking about.
Well, firstly, the presentations for both Karen and Diane were superb. It's lovely to actually see two organisations and two sides of the same coin talking to each other and collaborating. And we feel the pain, Karen. From our side, we feel the pain, and I know Diane feels the pain from the receivables and payables. But what's exceptional is that we can get two organisations or two sets of people together and talk. I think the comments have been exceptional. And I think the more that we do these, and the more that we collaborate, the better it will become. So you'll see Chris's solution, which I think is a great solution to try and resolve some of the issues. But the more we start talking about our issues as a collaborative community, the better it will be. Hence the reason that, you know, Chris with the APA queue and the CICM queue, those working collaboratively also is absolutely the way forward. So thank you for inviting me, by the way. It's lovely to meet everybody, and I'm looking forward to see Chris's presentation as well. And by the way, we're the little Yoda, not the Darth Vader.
Yes, of course you are. Great. Okay. Well, thanks very much, Jamie. I'm going to stop the recording now. This recording will be put onto the CICM's YouTube channel. Thanks to everybody. And as I said, we will continue recording after this. We'll continue the webinar after this as we go through Chris's presentation on the statement of reconciliation. So thanks everybody for joining, and I hope you'll catch this on the YouTube channel.